What's up, Wolfpack? Welcome back to my channel. I hope that you are doing great today. It's the day after Thanksgiving. Happy late Thanksgiving. I did not tell y'all that in the last video, so I do apologize for that. I hope that you all had a great Thanksgiving. I hope you're all having a great Black Friday. Make sure that you are not fighting anybody over presents or gifts or items. I mean, just remember you can order basically anything online now without fighting over it in the actual store, you know? In today's video, we're getting into one of the most important pieces of clean price action. It's daily levels, all right? These are the levels the algorithm targets every single day, and they're a major, major part of my strategy. By the end of this video, you'll know exactly which levels to mark, why they matter, and how price reacts to them. So, what are daily levels? Daily levels are simple. They're the previous day's key highs and lows. Specifically, previous day high or previous day low, PDH and PDL. That's it. You can also mark you can also mark the daily open, the daily close. All right, that's what I do. You can also mark a daily midpoint if you want. I don't do that. I just don't. To me, I just don't have a reason to do it. But the most important ones are PDH and PDL. You don't need a million lines. PDH, PDL alone will change the way you trade. Why does PDH and PDL matter? The market loves to target the previous day's liquidity. That's why they matter. All right? Think about it. Traders put stops above PDH. They put stops below PDL. That means liquidity. So the algorithm naturally gravitates to those highs and lows. If you ever wonder why price rushes straight to a level, it's almost always because that is a PDH or PDL. All right. New York loves taking out one of these levels early in the session. All right. It usually sweeps PDH or PDL, gives displacement, forms an IFEG, does a retest of the IFEG, delivers into the opposite daily level. That's why daily levels are your targets. Daily levels are magnets. Price just wants to tap into them. So, if we're going to look into this, right, let me go ahead and mark out these daily levels for you. You have one here, which is the PDH. You have one right here, which is the open. You have one right here, which is the close. I'm sorry. The bottom one is the open. This one right here is the close. And then you also have PDL, which is the low. All right. As you can see, during Asia, we already rushed to one of these daily levels. All right. That's liquidity that's been taken. Now, if we go back and let's say we mark out, let me change this to a different color. Do this one, and we'll change it to green. All right. Change that one, put this one, and this one. All right. So, as you can see, price smacked through these first two, right? Market closed right here. It shot down towards this daily level down here, but could not reach it. So instead, it decided to go back up and take out this daily level. All right. Now, if we go back on the 5-minute, we can do a replay for it. Replay. We'll do right here. All right. So we came in, we opened above this green line, open above the green line, right? As you can see, we don't go and touch the PDH, which is the previous day high. We don't go touch it. We traded below it almost all day. All right. New York comes around. and we shoot down, trying to take out these daily levels down here. However, we fail to come and take them. So what does price do instead? Price decides to come and take the PDH because there's so much liquidity sitting up there. As you can see, boom, we took that liquidity. Gone. And then it just kept climbing a little bit more for the rest of the day. All right? Delete these lines now. So price is always going to do that. It wants to come toward those daily levels. All right? The daily open helps you understand whether price is trading at a premium or discount relative to the day. If you want to know about premium or discounts, you can go look at my video from 3 days ago, and it explains everything there for you. Above daily open is the bullish tone. Below daily open is a bearish tone. This doesn't mean you have to trade it blindly, but it gives you a directional framework. All right. Daily 50%, which I don't use, but it might be good for you. That's the midpoint. It's another great tool. All right. Price usually returns to the daily midpoint at least once per session, and this makes it a high probability target, especially after a sweep. It returned to that 50% when it dropped right here. All right. The midline is like a fair value for the entire day. So here's how daily levels combine with my 5-minute strategy that I do in the morning during New York session only. It's New York sweeps PDH or PDL, which is usually what I'm targeting, right? You get a displacement, IFEG forms, a retest happens of the IFEG, and then price delivers into the daily level on the opposite side. That's why my targets are usually daily levels. They work consistently, always. All right. So that's daily levels 101 with PDH, PDL, daily open, midline, and why they work with liquidity and displacement. Tomorrow, we're going deeper into targets, how to choose smart targets using the higher time frame. If you don't mind, please drop a like, subscribe, and I'll see you tomorrow, Wolfpack. Have a great day.